Okay, welcome back. This is Corporate Radar. The markets are absolutely flat on the indices. Umesh Revankar is Vice Chairman and Managing Director at Shriram Finance. He's joining us right now to take some questions on the back of the quarterly numbers which the company has reported. Mr. Revankar, it's always a pleasure. Good to have you with us here, and thanks very much for your time. While disbursement growth has been pretty healthy in the quarter, Mr. Revankar, earnings, which you've reported of about 1,300 crores, has missed expectations. What's being blamed is higher credit costs due to one-time provision impact on account of annual stress testing. There is some amortization of intangible assets because of the merger as well. Could you talk to us about these two specific items and whether this is pretty much limited to this quarter, or will we see some lingering impact in the quarters to come as well?
Yeah, thank you. Amortization is something which around 1,500 crores, which will be done over the 5 years. It is merger amortization cost. This year, 300 crores, for this year, 300 crores has been done in this quarter. So it looks very lumpy because it's done in one quarter. And the rest of the 4 years, we will be doing every quarter 75 crores. So it will not be significant in a particular quarter. That's one. And as far as the stress test is concerned, it is more of a forward-looking. So we wanted to get it done mainly because of the current economic indicators and macroeconomic conditions. We wanted to look at the stress test on our portfolio based on the past experience. So one of the big four has done it. And it is more of a forward-looking. The performance can be actually much better than what it indicates. So based on the stress test, we have done some higher provisioning. That is more of an indicator. But the actual performance, because the economic activities in India are good and our business, most of these segments which we are operating in are in a very positive, healthy scenario. We believe that our performance will be much better in the coming year.
So what about on the net interest margins? You've managed to defend and hold on to your net interest margins at 8.5%. But with the rising cost of funds, what's the guidance on NIMs going ahead?
We should be able to maintain the net interest margin, and we should be able to pass on the increased cost. But it will happen incrementally. What is holding reasonably good for us is the diversified borrowing mix we have. We have 5 large borrowing mix. Retail deposit is doing well. In fact, retail deposit is around 23% of our total the portfolio. And then, of course, you have NCD, ECB, and the securitization and bank. So right now, the NCD and ECB cost have gone up in the last quarter incrementally. The rest are holding good. We hope that our liability cost may not go up further if depending upon the inflation and the RBI's further credit policy. And we should be able to hold to our net interest margin to current level.
All right. Hi, Mr. Revankar. AUM growth, I think you're guiding for around 15%, right? Could you tell us the segments that will drive that? And also give us some color on the credit cost and asset quality?
Yeah, see, most of the segments which we are in, whether it's a commercial vehicle, passenger vehicle, or a two-wheeler, MSME, and gold loan, most of the sectors are doing very well. One is they're doing well in the sales, new vehicle sales. Even in used vehicle, the resale values have been very good. So credit cost per se will definitely be much better going forward, because as the value of the asset we lend go up, then automatically the default ratios or the defaults will come down, and our ability to repossess and realize value go up. So with that, I believe the credit cost will become much better. Today it is around 2%, which we have given the guidance. It can further improve if this current economic condition prevail for a longer time.
Out of this one-time provision of about 300 crores on account of the stress testing, how much is really stressed. What is the chance of what could be the credit cost out of this pool?
No, it's basically ECL provisioning. It is not actually credit cost. So credit cost can be lesser than what is being provided for. So it can definitely improve if the current economic condition continues, is what I believe.
You said the credit costs number will improve in FY24. What is the number that you're anticipating, and any guidance on gross NPAs from here?
See, gross NPAs today stand at around 6.21 for the last quarter. We expect it to improve, go below 6 over the 1 year, because the economic indicators broadly are very positive. And as I was telling you, most of the assets which we are lending, their resale values are much better. And since the resale values are better, our asset coverage will be better. And definitely both the NPA and the credit cost will improve going forward.
Any number on the credit cost in terms of guidance?
We give a long-term guidance of over 2%. It can come down. As economic condition improve, it can come down to around 1.6 level. But it all depends on the prevailing economic condition at that time.
All right, we'll leave it there, Mr. Revankar. Good speaking with you, sir. Appreciate you joining in, and thank you for your time here on CNBC-TV18. 3-point change on the Nifty. So 17,918, but don't let the index value mislead what's going on beneath the surface, where there is lots of buoyancy, lots of gains. PI Industries, if you can just quickly pull some of these names up. Mitesh is with us as well, so we'll throw some of these names to him to tell us what to do. PI is up 10%. It's a big move. Tejas Networks has come up with the 8% gain, 678. Most of these are all the cash stocks, where the bulk of the action is. Syngene, Persistent, Policy Bazaar, these were there in the morning as well. Maybe gains have picked up a little bit more. Central Bank of India is up about 4% or so. Stocks at about 30. UCO Bank is up 4%. South Indian Bank is up 4%. J&K Bank is up 6.25%. So lots of these smaller banks, both PSU and non-PSU, which are doing well. Look at Kalyan Jewelers with a 4% gain. Stocks at about 106, 107. HOEC is up 7.5%. Stocks at about 162 right now. NCC is done well, 119, 2% higher. Data Patterns is up about 4%, and so on and so forth. And enough and more volumes really is what we are seeing out there right now. Shriram Finance, of course, we spoke with them. The stock's down 5.5%. Voltas has recovered a bit. It was down almost 5%, and it's come up about 1.5% or so from the lowest point of the day right now.
Industars has made a big up move today. It came out with numbers 2 days back. Yesterday as well, the stock was higher. Industars now up close to about 8% in trade. What this trade is happy about is that Vodafone Idea was struggling to make its payments to Industars, right, till the quarter of December, as a result of which Industars for 2 consecutive quarters had taken a big write-off. They had made provisions against the receivables from Vodafone Idea. In the January to March quarter, what changed is that Vodafone Idea at least made its entire monthly payments for the Jan to March period. What is pending till December still stands. Those outstanding receivables stand till the month of December. But at least from January to the month of March, the company has been able to repay. Vodafone Idea has been able to repay all the outstanding dues against Industars, as a result of which, the receivables picture from Industars actually also came down on a sequential basis. So just the fact that Vodafone Idea is proactively trying to make its repayments towards Industars has been liked by the street, and the stock is higher in trade today. But let's find out how you can trade today. There is no movement at the index level, but mid-caps are doing pretty well. Mitesh, any trade on the Nifty? It's come off. Would you recommend a buy at current levels, and individual stocks that you would recommend?
So, good morning again. The Nifty, I think, the trend is on the upside, but having seen the index rally from levels of 17,550 to about 17,950, I am not very keen to initiate a long stretch at these levels. On a pullback, if you get an intraday dip, yes, definitely, I think, closer to about levels of 17,850, 870 is the buying zone. These are on spot levels, so we are only about 40, 45 points away. And then keep a stop below 17,820. Having said that, trade on the long side, today the action is on the mid-cap side, as you and Prashant were rightly highlighting. And I've got two mid-cap names as on the buying list. AB Capital is making a fresh swing high. The first hour price and volume action is very encouraging over here. So buy this one with a stop below levels of 161. Look for targets of 175. And B, not exactly a mid-cap, but yeah, I think this one of the smaller stocks in an overall perspective. That's buy as well. Keep a stop at 101. Look for targets of 107.
Okay, thank you very much for that. Let's get to the big corporate development yesterday. Godrej Consumer Products has announced that it will buy Raymond's FMCG business, Raymond Consumer Care, for 2,825 crore rupees. My colleague Shilpa caught up with Gautam Hari Singhania, Chairman and Managing Director, and Amit Agarwal, CFO of Raymond, and began by asking Amit on the contours of this deal and about the demerger. Listen in.
Today we have signed the BTA business transfer agreement, which is a slum sale of our FMCG business, which comprises of Park Avenue, KSDOs, as well as the Kama Sutra, condom and sexual wellness business. This is the business which we have sold to GCPL for a price of 2,825 crores.
Right.
Now, we have kept the manufacturing facility of condoms at the Aurangabad plant, which will do the B2B business and will supply to GCPL and some of the other customers. So right. That's the broad contour of the deal with the GCPL. Now, as far as the demerger is concerned, the RCCL will get the cash, and we have at the Raymond Limited lifestyle business, which is having the debt. We will demerge the lifestyle business from Raymond Limited into RCCL along with the assets and liabilities as well as debt, so that the cash which is at RCCL from the sale proceeds of FMCG business can be used to repay the debt, and therefore making lifestyle business a debt-free business.
Right.
Automatically what happens, since the Raymond lifestyle business is a listed entity which is getting demerged into Raymond Consumer Care Limited, which is an unlisted business, will automatically get a listed company.
Right.
So therefore we are achieving a pure play lifestyle listed net debt free business.
Right.
So that's one. Second thing, what also happens is that the Raymond Limited will then have the core as real estate business, which we are developing in a larger manner, which will also have investments into the engineering business as well as in the denim business.
Right.
So that's the one we are talking about, the demerger.
So can you tell us what the net debt is then at this point, and basis the stake that you have currently in RCCL, right? So my estimate is about 1,400 crores comes in. So how much of that is going to get covered? How much of the net debt is that going to cover, and how much more will the promoter have to put in?
So actually, if you see, the RCCL is jointly held by the promoter entity as well as Raymond Limited. So to the tune of 49% is held by the promoter and 47% by Raymond.
Right.
So the money which comes in will be in RCCL, and the promoter is putting his contribution or his stake sale proceeds into the lifestyle business in RCCL in order to ensure that it becomes a completely net debt free.
Right.
Because obviously you will have to pay tax on the sale of this asset. So net of tax, we see there is a substantial amount which is available to take care and make the group a net debt free group. Because at the end of December, our net debt at Raymond consolidated level was 930 crores.
Okay.
So that will ensure that we become a...
But for the lifestyle business, what was the...
So lifestyle business had a gross debt of almost 2,000 crores, which is coming down.
Okay.
And therefore, it is easier for us to repay the entire debt of lifestyle business.
Right. So net, what does the promoter, Mr. Singhania, get out of this entire deal?
You know, I think there's many things. One, of course, you got great value on the business that you sold. It certainly helps me achieve the dream of unbundling and, you know, demerging the companies, which is what the market always wanted.
Right.
They wanted focused companies doing focused businesses. So we will now have the lifestyle all come under Raymond Consumer Care, and it'll be a single company. And number three, I think we'll become net debt free.
Right.
So net debt free is something the market has always asked us when you will be. We had committed that we will be net debt free by March 25. always said subtly that we will, with a little bit of luck, do it earlier. And we're doing it 2 years earlier than our commitment. So I think this all will create exponential shareholder value. Now you'll have totally two different businesses with this own, and it'll help me to actually achieve my dream of putting proper governance in place for both the companies. There'll be 2 listed companies. And, to achieve net debt free is a big thing for us.
With respect to the FMCG business, the sale to GCPL, I just wanted to understand on the Park Avenue brand bit, right? So you also have Park Avenue in the branded textile space, and the FMCG bit you're selling. I'm trying to understand, now 2 different companies will own the same brand. How does that work? Do you think rather instead of selling the brand, a licensing agreement could have worked better?
Well, like I said earlier, the licensing is the same thing. It's just the structuring, whether you sell it or license it. If you license it for 20 years, you'd have the same outcome as you'd have from a sale.
Right.
It's just it'll be a different fee structure, different one-time amortization structure. So frankly, I think Godrej is good in the space of the FMCG. Assuming we sell X number of cans of deos today, Godrej doubles it, triples it, quadruples it, there'll be a rub-off effect on the Park Avenue brand. And as the Park Avenue apparel brand grows, it'll have a rub-off effect on the FMCG brand.
Right.
Both companies will spend on advertising and marketing, which will help both companies.
On that note, we'll slip into a very short break. On the other side, we'll get chatting with Ramdev Agarwal, co-founder of Motilal Oswal Financial Services. Stay tuned for that discussion.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM, let's create.
Hey, कमाल की कार है ना? सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है? अरे सर, प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100. इंडियन ऑयल, पहले इंडियन, फिर ऑयल.
We are all different, but our soul is the same. We go wherever life takes us, and we do it in our own way, because it's our differences that make us who we are. Hey, buddy. Hope you liked them.
Introducing Apollo Alpha. Add more thrill to your beast.
अभी तक मटेरियल आए नहीं? पैसे नहीं है. अच्छा.
यूग्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी.
इतनी जल्दी?
From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations, meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times. A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
Powered by Bandhan Mutual Fund.
Making the future truly forward and charting a path towards gender parity.
We can have a bigger vision, but it's often the minor details like not having toilets for women which are not on the same floors. These are the little things which come in the way of making women feel safe, accepted and welcome in the workforce.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC.
Co-presented by HCL Tech.
Knowledge partner, Deloitte. Industry partner, FICCI. Associate partner, Reliance Industries Limited.
Well, hello and welcome to this special program. Markets are, of course, about 4 or 5% away from all-time highs. Will we get to all-time highs? Can the market continue to perform like it has been from the lows which were made in the end of March? That's the question. And who better to answer some of this than Ramdev Agarwal, Chairman and Co-founder, Motilal Oswal Financial Services. He's with us here in our studios to boot. Ramdev, great to have you with us here.
Good morning.
Thank you very much, sir, for making it here. What is your sense? We are in the midst of the earnings season.
Yeah.
And you're a very close watcher of earnings, and you've always believed that earnings will dictate eventually where stock prices go. So what's your reading of what we've seen so far from the fourth quarter earnings?
Yeah, so fourth quarter we are seeing some positive surprises in terms of earnings, like Nestle, this thing, Maruti's number, or automotive particularly like Bajaj Auto and all. So they were kind of a bright spots. Banks across the board, like private as well as public. So I think in my 30-40 years career, this is the best banking system across, like whether it is the private and public. You have very robust banking system, apart from profit growth and NIM growth and all that. Lowest credit cost and all. Just that every bank is capitalized. Government doesn't have to give any subvention or support, capital support to any of the banking system. So I think it is really ready to fund the Indian economy's growth. So that's one good thing I see. And last year could have been a very good year, but for the Ukraine war and all the inflationary and logistic dislocation and things like that. But now I think that seems to be subsiding. I'm visiting a lot of companies, and all of them are saying that cost is definitely on the decline. It may not be in the Q4, this quarter, that they will get to see the benefit of that. But Q1, Q2 should be much better, because all those high-cost raw material inventory, they'll all get consumed in this quarter, and next quarter onwards, you'll see the margins expanding. So I think earnings momentum is going to build slowly. From here onwards, economy is likely to grow at anywhere between 6 to 7% with 4-5% inflation. Another bright spot in the economy which is developing is the stronger rupee. If you see the rupee today, I don't know how much it's trading. Yesterday it was 81.75 or 77. So continuously there is a strength of rupee. Current account deficit is slumped in the Q4. Is it one quarter phenomena, or it is going to be repeating, because the kind of services growth we saw in last 4 quarters, is it going to continue at that pace, even at 15-17%? I think we are in a very interesting turning point of Indian economy. If by chance our current account deficit comes to about 1% or so, which can be funded very easily. And so rupee dollar, where we keep losing 3-4% every year, which again has huge implications everywhere, interest rate, inflation, I think there we might get some relief. I mean, even if 3-4% decline comes down to a percentage or so, because then RBI will try to build the reserve about $1 trillion, $2 trillion, whatever. So I think we are in a very good sweet spot. My sense is...
Before this acceleration, many have said that there will be a deceleration. After the third quarter, earnings saw lots of downgrades.
Yeah.
But we will go through this process of more downgrades this year, because the world is slowing down, and some of it will show up here as well.
Yeah, but Indian economy has its own kind of momentum. The government has set its own momentum of 6-7%. It's the fastest growing economy. So in that context, see, if you look at even till Q3, first 3 quarters, the top line growth of corporates were like 15-16%. It's just that cost inflation, they just couldn't pass. And hence the earnings growth were very muted. Q4 is looking much better if you look at the aggregate numbers. So my sense is going forward from here, we are going to see that at least 15%, 17% across the board Nifty earnings growth. There will be some spots of weakness. I believe some portion of rural economy, there the low-end discretionary spend is still pretty weak. But that always will be there, some reason or other. But I think across the board, earnings, once the earning momentums pick up, then the retail behavior, FI behavior, and if you see longer term, see one is that we are focused on next 4 quarters and things like that. But you look at 5-10 years. This is the only large economy where you can say 5 to 7% sustained growth for 10 years. Which economy you can say? I mean, China has done what it has done, but from here onwards, China growth story still remains intact, but their stock market story is gone nowhere. So after US, it's only India where you have the opportunity of going from 3.5 trillion to 7 trillion. And if the rupee doesn't depreciate in the next 5-7 years, then you can achieve that in maybe 5-6 years, So you could be staring at 2030. At least you invest for 6-7 years, which is economy going from 3.5 to 7 trillion. I mean, you and me cannot imagine how India will look in 2030.
So the long-term picture for India is very bright, but just talking about, say, the next 12 months, do you think banks will be outperformers or market performers? Because everyone's expecting good numbers. So in a way, it's priced in, it's already outperformed. And then there is a risk of NIMs contracting. So can banks generate that alpha, which they did in the last 12 months going ahead?
I would think it will not be huge alpha. But I think because, see, there are 2 largest segments of the market. One is this banking. Second is IT. These 2 make up almost like 45-50% of the market. Yes. If IT in any case is slow down, so I don't expect IT to be in a terrific shape. Though in US IT is doing very well, but in India, because of their own earnings slow down, I think IT will consolidate in this year. So then only thing left is the banking. So, and banking earnings are going to be very good in this year. I don't, I mean, there are talks about NIM contracting maybe 10 bips, 20 bips or things like that. But still the top line growth will be pretty good. And operating leverage will also come. So my sense is that the current year should be a good year for banking as a whole, but I don't know how big will be the outperformance. Market performing, yes.
All right. Hi, Ramdev, so banks are continuing to do well on their results. But what about IT? That's been the big disappointment, right? That's the other smaller pillar. But that's disappointed. Very good quality companies. But if you're buying, like you said, invest for a little longer duration. Someone who's investing for 5 years or good time to start nibbling in right now?
Yeah, clearly valuations are corrected. The good time to buy IT. See, IT story of India is going to be the story of India in the sense that we are going to write this and it is going to come back with vengeance in the sense that the growth rate which might come down from say 12-13% to maybe high single digits, 7-8%, 10%. So then something will change. When the US economy, world economy comes out of shell and they want to again build up investing in their IT and all, again we'll get orders.
So good time to start dipping into IT, you think so?
I mean, you can go stock by stock, but you have time in the sense that you can start building up your portfolio on IT also.
Preference between mid and large IT companies?
I think large mid caps.
Large mid caps about to become large
Who qualifies
caps.
under that?
Yeah, like LTI types, which are in $2-3 billion kind of a thing.
Yeah.
So they don't suffer from the lack of scale, and they also don't suffer from the large scale.
That's very well put. So IT and banking is what we've spoken about, services, but what about third leg, manufacturing? And that's the question that we'll put to Ramdev. We have to take a quick commercial break here. We're back with that in just a bit.
It's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family. The new Fiamma Mint Charcoal Soap. Refreshing fun.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
कैसे करते हैं ट्रेड?
Try 5 पैसा. Upcoming corporate action या news flow. किसका हुआ merger? कौन है नया CEO?
Financial data मिलेगा अब हाथों हाथ. Fundamental analysis से अब बनेगी बात.
जानो हर stock जो है trendy. Technical analysis से भी लगेगी friendly. Quarterly results होगी send. Luck by chance investing का होगा the end.
With 5 पैसा's in-depth company information, always stay up to date.
ऐसे करते हैं trade.
सोच मत छोटे. Install mat. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. We're in conversation with Ramdev Agarwal of Motilal Oswal Financial Services, and we were talking all things markets. We discussed banking, we discussed IT, and now we want to talk about manufacturing. That is the third leg, which we've been waiting for so long for it to start to fire, right? Sputtering kind of starts, but not very steady, although hopes are always very high there. But there is always some segments within the manufacturing space which are doing well. I mean, take defense, take railways over the last 2 or 3 years, which have done extremely well. What is your sense, Ramdev?
See, the biggest part of manufacturing in India is automotive. You know, so whether it is cars, trucks, or motorcycles, scooters, that is basic transportation, you know. I mean, so that's where I think the high incidence of your GST and all, that kind of hinders the immediate demand pickup. But I think that demand has also picked up. Cars have done very well. I believe from March, even the two-wheelers have picked up reasonably well. I mean, let's see whether, I believe April, May is also going to be good. So I think automotive is picking up. Without automotive picking up, see, there are only two things, housing starts and your auto. So both of them are the driver of big ticket items in any household. House itself and then the car. Rest all is like a daily kharcha. So housing demand is very good. Real estate is very good. So all the components of real estate, whether cement, steel, your plywood, your paints and whole lot of things, you know, whatever goes into building a house, filling the house.
Building materials, the entire
building materials,
spectrum.
all so that's one, and that's all manufacturing. So tiles and all. So I think that should pick up as we go forward, as a interest rate stabilizes or starts going down a little bit. So that's where I think bright spot is, or your automotive. Automotive has one problem, this EV versus IC. You know, that confusion is on. Who is going to transit successfully? So multiples will be in question, you know. But I think earnings will, because money is not there in EV, money is there in IC. So, and transition to EV in China and Europe has become very fast, but in India it's still very slow. So cash flow will be definitely coming to, and look at the capex announcement by Maruti. They have talked about third plant coming up and fourth plant also there. So that shows a demand build up, because that's a aspirational manufacturing company.
You said housing, their real estate, I mean, contractors, builders basically. What's your view? We had the management of Lodha with us recently. Of course, they were talking their book, but they basically said that we are in the second or the third year of what is going to be a longer than usual real estate upcycle. Do you believe that to be true?
Yeah, I mean, we've not made money out of any real estate, so I've not. But I think this is almost a lost decade for them. So it must last, because ultimately housing needs are there. Everybody needs house. There's so much of gap between the housing stock and demand. So clearly, and here the interest rate is very important. If by chance we can give interest rate little lower than say today, say 7.5%, 8%, if that can come down by even 100 basis point, I think this run on demand for housing, that will keep building up. And this is where again this rupee dollar is going to play a role. If you keep losing 4%, it does play into the inflation. If that becomes zero, you imagine, at least 50% of that will flow into decline of the inflation.
What about the rural market? Are you worried about the rural slowdown extending itself? Because HUL's volume growth numbers were not very inspiring this time.
Yeah. So I spoke to one or two companies which are catering to, they're saying that basic demand is there, but anything called discretionary, say, that's not doing well in rural. So is it because of the high inflation? Is it because of the high taxation incidence? Is it because of just that construction transfers are not picked up fully? Because a lot of rural income is not only agriculture, it's also what transfers go from urban centers to the rural centers. So maybe trickle down may take another 6 months or so, because dislocation because of COVID was very, very deep. So I would think that it's a trickle down, and maybe another 6 months and good monsoon, I think that will do the trick.
Ramdev, I want to ask you a couple of questions on the flows. I recall you telling us the FIs, they're having it easy getting out of the market. But when they have to come back, it's going to be painful at higher levels. So, that seems to have played out as well. In the last month or so, we've seen more buy numbers from the FIs. So how do you see the FI flows moving? And also with regard to the domestic flows, now you're getting fixed income at 7-8%. So do you think there is a chance that domestic flows cool down a little bit?
Yeah, it has definitely cooled down because all the guys who came, they've not lost money because of steadiness of the market, but they've also not made money.
Not made money, yeah, that's the point.
And the guys who went to fixed income, they didn't have to go through up and downs, and they still made 7-8%.
Yes.
So as the market takes off from here and goes up by 20%, then again the power of equity will come back in the sense that it is at 12% instead of 6%. So that assertion to the new set of people is yet to happen. So the index has to go from current 17,000-18,000 to more like 20,000-22,000. Whenever it happens, maybe next year, year after that, it will happen. I don't have any doubts. So when that happens, then people will realize that here, this is where the money is made.
Yeah.
So, and real fun will be when something happens and the earnings growth picks up to 20%. Then you see rupees stable and earnings growth is 20%. And P multiple is also 20. Because next year, talking about 900, anywhere between 25 to 50. So then you are at 18,000. So you are talking about less than 20 P for 24, which is kind of reasonable. So then FIs also pile in. So a lot of things are converging into what can happen in next 1 year. So that's what we are hopeful.
Rangan, let's get to the earnings at Motilal Oswal. They've been a little subdued. I mean, if you look at asset management, asset and wealth management, capital markets, numbers have been on a year-on-year basis subdued. Home finance is the one which seems to be the bright spot. Tell us, what are the plans?
So of all the businesses, we had a bit of problem in last 2-3 years in housing finance. Now with all the, what is happening to the entire financial sector, this has also picked up, and now we are out of the woods, I would say. There is a 50-60% growth in the profits, and it is looking good in the years ahead. So I think that is one achievement. The rest of the businesses are stable. Actually, Motilal Oswal is a twin engine. One is the operating business, another is the investment portfolio. Investment portfolio is 100% equity. So last year when the market was flat, broadly portfolio has remained stable. So there is no accrual because of that, which is very 60-70% of the balance sheet is there. Whereas the earning side has done 4-5% higher only, all put together. So clearly my net worth has grown about 12 to 15% in the current year. From 5,600 has gone to 6,250. And the moment the second engine also works in next year or year after, then you will see I think last 8 years compounded growth in the net worth has been more like 24-25%. So I think those rates will come back, but current year is not matching with that.
All right, Ramdev, a quick final question then on the index itself. With a 1 year horizon, will we be at 19,500, 16,500, or do you think we consolidate at these levels?
Will be higher. I don't know how higher.
That's a safe answer.
I mean, he also mentioned that on 700 points higher. No,
1,500 points higher, 1,500 points lower. So which one do you want to go for? 1,500 higher?
I would think so, because see, once 1 year is negative, then you have longer you underperform, that 12% is getting accumulated. So I would think 15-17%, it is ready for a move.
Gains accumulate.
Gains.
Then they happen.
It's like a what do you call cumulative redeemable preferentials. So if you don't pay now, you're going to get it later.
On the investment book at Motilal, I mean, anything new you've added? Anything?
No, it's same. I mean, public and private, some kind of a split is there. So that continues.
And the public market side, anything? Because you keep evaluating opportunities.
Yeah, no, nothing direct. Yes, it's all going into. In fact, last year accretion to the investment portfolio is low because of all these regulatory changes. That is taking a lot of free cash flow from the operating side into the businesses.
These new age businesses, Ramdev, you had a strong view. I mean, things like Zomato, etc. How's the view panning now? Because
I think worst is behind.
Yeah,
worst is behind. I mean, we have seen peak of pessimism, and I think some kind of I would not say optimism, but some kind of sensibility is prevailing, and even managements are going for faster road to profit, and they are struggling to. They're not used to showing profit, so they have to work extra hard to change the track, and instead of losing money, I mean, at a cost of a little bit of growth, they have to make the model a little more profitable.
Absolutely. It's a pleasure speaking with you as always. Thank you very much for dropping by, and we hope we can make it a regular feature. Thanks very much. Well, that's Ramdev Agarwal, Chief at Motilal Oswal Financial Services, on all things markets, and of course, earnings for the fourth quarter from the company as well. It's a goodbye from all of us here, Rima, Nigel, me, and the entire team on Bazaar. Thanks very much for watching. More coming up in just a bit.